Well, David Bloom, Head of Foreign Exchange Strategy Research at HSBC, joining me in studio. David, thanks for joining us.
Thanks for having me on the show.
So we're used to seeing you based in London, so welcome back home to South Africa.
Thank you very much. That's great to be here.
Let's just talk about global markets right now. I mean, what do you, when you look at the picture as it's playing out right now, a bit of a breather, some might say. It's skewed by the fact that some markets are closed today, of course, London being one of them. But what is your sense as to what are the key drivers? Is it really accommodative monetary policy? Is that the main factor that's boosting equity markets across the board?
Well, I don't see what else there could be. No one's getting bullish on earnings. No one's upgrading their GDP forecasts because what you really want to see is earnings going up. So I'm not quite sure how you value things at the moment, I have to be honest. I'm talking myself out of a job here. But in the currency markets, people are so unsure. So actually volatility is collapsing in some of these currencies. They range trading. They're in very narrow bands. You look at Aussie, 102, 106. It just doesn't want to move at the moment. You know, Canada's tried to rally below parity. It's not really making it. So actually volatility is coming down in markets because we got, as you mentioned before, we got the stronger payroll number. Now you'd think stronger payroll number must be dollar positive. No, it wasn't. Yeah. So the ECB cut interest rates. That must be euro negative. No, it wasn't. Why? Because the political issue in Italy, you know, was greater than anything else you had. So sometimes politics is the new economics, and that feels very confusing.
So of course, I mean, we've had a batch of data out today. Chinese data disappointing when it comes to the services sector. We've had Eurozone data continuing to be downgraded. Germany, that PMI figure for April, the composite PMI figure sitting below 50. So what you're saying right now is we have to look at the currency market. It's not economics. Just ignore economics, or I mean, how do you look at the economic picture in light of what is really driving currencies right now? Well,
it's a whole mixture of things, and because the economic picture is so confusing, if we go back 2 months ago, the Fed was going to taper off QE. You know, there was payback on the LTRO in Europe, so actually things were going quite well. And then bang, Japan comes with this massive 70 billion a month package. The Fed talk about non-tapering of QE. You know, we have a rate cut in the Eurozone, and people are talking about more QE. Carney comes into the UK. So we went from kind of tapering ending to massive more QE. Then Friday you get a better number. Now everyone's feeling okay. This market is just jumping around. We don't seem to be able to settle into a pattern and to understand these markets very well. So I think for the moment we think range trading is the order of the day. You need something new and different to break the range. Do you need to feed that monster to
I was going to ask you, what's going to be the next catalyst for markets? Because we know the earnings have come through. We know that central banks overall appear to have become more decidedly dovish. We know there's been downgrades to GDP forecasts, disappointing data. So what's the next catalyst as you see it?
Well, we don't at the moment, so that's why we see this range trading idea going on. But that never lasts, because more and more people play the range as they get tighter and tighter, and once it breaks, you know, all hell breaks loose. But that's not for the moment. For the moment, it's hard to see what is the US going to do. Are they going to taper? They're not, so you're not quite sure there. Japan's done what it said it's going to do. Let's see the effects. It's suddenly the ECB's in action. At the moment, nobody sees this big breakthrough. I mean, you're seeing it some in the equity markets moving to highs, but in the other markets, nothing's happening.
Let's talk about South Africa in the context of all of this, because certainly the bond market here has been rallying. We've seen strong inflows this year. Definitely post the Japanese announcement of aggressive monetary
this idea that the Japanese investors going to come everywhere in the world and hoover up all your assets because they're printing 70 billion a month. The South African bond market's worth 100 billion.
So do you buy into that theory?
No, not at all.
Why?
Because it just didn't happen. It didn't happen in the United States, doubled their monetary base in 2008. And if they carry on doing what they're doing, they'll also double their monetary base in 2 years. We had massive QE and increases in monetary base in the Eurozone. We had a tripling of the monetary base in the UK in 8 months. And what happened? Where's this recovery? Where's this growth story? It's not there. So why is it going to work in Japan, where it hasn't worked for 20 years, where they've got an entrenched culture of deflation? Suddenly it's all going to happen. Suddenly Japanese investors who've been massively risk averse are going to be suddenly risk loving. I don't see this dramatic change. I don't believe the Abenomics story that the markets are believing. And I'm in a minority at the moment. We've got dollar yen coming back towards 90 again. We just don't believe this whole story.
So you're completely contrarian if you get a sense as to what the market is anticipating right now.
Yes, absolutely.
The market's seeing, dollar yen 100, and you're seeing it 10 below that.
Yeah, well, they're not seeing it 100 now. They're going 110, 120. They just, people are just, who didn't forecast this at all by the beginning of the year, didn't see it coming, are suddenly adding numbers and getting, I just don't believe it. I'm sorry. I think there's been no reaction function from other Asian central banks. Everyone in the world said Japan needs a recovery. The currency's moved 25%, fine. Moves another 20%. Those currency wars, back in action. Other countries will start reacting and the situation might get a bit poisonous. So I think the yen's done what it's going to do. Now they'll talk about structural changes. You buy structural changes. So I don't believe in the story of a perpetually weakening yen, but I also don't believe the story that the Japanese investor is coming by their busloads to buy your South African bonds and therefore they must rally, or your Polish bonds or your Malaysian bonds, because this is what's happening worldwide since then. It's not just South Africa. There's this global idea that the Japanese QE is going to leak out and buy everything in the world. It sounds a little far-fetched to me.
What about, because if you look at the rally in the bonds, that hasn't been mirrored in what the rand has done. It almost decoupled. So where do you stand on the rand? Because most, the fear in South Africa is the current account deficit. And of course, a lot of, factors in the local economy. Where do you stand on the rand?
Yeah, okay, so let's take two issues here. First of all, the bonds is rallying and the currency not. That's not unusual. In Poland, the bonds have rallied and the currency not. That's because there's an expectation that the Japanese are going to come and buy, and therefore the bond market's rallied, but there's been no flow. The second point is I'm bullish on the rand. It's an unusual position that you have to fly someone in from London to be bullish on the currency, because I can't find anyone locally to be bullish.
You are South African, so you have a little bit of bias
I see the same situation in Turkey.
Why are you bullish on the rand?
Well, I think first of all, this trade deficit, selling the rand and the rand sells off. Yeah, of course, you're a young, dynamic country. You have a trade deficit and a current account deficit. You should have investments greater than savings. Then you get politically bearish. But if you look at sequestration in the US, that's happening because the Republicans and Democrats are getting on. You see what's going on in politics in the UK. You've got to be relatively worse than me. Not absolutely bad. It means nothing in the FX world.
Where do you see the rand going?
So we've got 820 to 830 by the end of the year. We're bullish on the rand and we're very happy. I'll give you an example. When the gold price sells off, everyone turns bearish. But while the oil price was falling, that was very bullish for the rand. Nobody said a word.
I have to ask you one last question, because you're here as well. Apart from being bullish on the rand, you're also bullish on the renminbi. Talk to us about some of the changes that are taking place when it comes to the democratization or the liberalization of the Chinese currency.
So this, when we talked about the rand, people are interested in value, not the function. The renminbi, we're talking about the function. How's it going to operate? Are you renminbi ready? Like, are you HD ready? Are you ready for the changes that are coming into the future? That you don't just go buy a telly where it's not HD ready, because you know you won't be future-proof. So what's happening is the Chinese are internationalizing their currency. Trading goods and services is 25 trillion a year. FX turns over 4 to 5 trillion a day. Capital flows swamp trade flows. It's this world that they're branching into. They want us to invest in them. They want to invest in us. It's the opening up of the flower. The flower has grown, and now the flower is opening. That's what the internationalization of the renminbi is. It's about the functioning of the currency, not just about the value of the currency. And that's changing radically.